Happy New Year to each and every one of you out there. If 2020 was the year of the virus, 2021 was supposed to be the year of vaccine. And as I record this today on the first year of 2022, looking back at 2021, it did start out as the year of the vaccine, but mid-year it transitioned into the year of inflation and rising interest rates, supply chain disruptions, and then ended as the year of the Omicron virus. So I'm not even going to hazard a guess as to what 2022 is going to look like. But I think it would be safe to say that it would be a while before we return to the normal that was associated with our pre-COVID lifestyles. And if that happens in 2022, I think that would be called a year of success or return to normalcy. Greetings, viewers. You're watching Aman Sangha, independent financial advisor in Mississauga, Ontario. In my update for the month of December, I will be capturing the year that was 2021. And to do that, we will, as always, I will be breaking it up into three main points. And I'll start with, I was hoping we never get there again, but we'll start with some of the data for our Omicron. And then we'll get into the index returns for the year, which are largely spread out across the major asset classes. And then try to understand from them if there is any learnings that we can learn from the 2021 returns that we can deploy into 2022 and forward. So let's get started right with it. Now, this is the Omicron data. I mean, this is about a week old. So the cases have since risen exponentially from what is presented here. But the picture on the left-hand side is clear enough that, you know, this is the number of cases are shooting exponentially world over. The vaccinations, like in Canada here, it's showing like we are at about 80% of the population vaccinated, are hopefully keeping this wave down and less severe and keeping people out of hospitals. But there is still a lot of uncertainty as to how this plays out into early 2022. With that, I want to just say that this is wait and watch for now. And while we do that, it gives us some time to reflect on what happened in 2021. So the first thing, if you look at, these are the returns as of December 21st. I mean, the markets have gone up a little bit since then. But I think the message here is, this is the Canadian bond index. It's the returns are negative, and I'll come back to this in a little bit. But what you see here is that the three major North American equity indexes had a great run, and that came on top of a great run that was 2020. It's unusual, but it's not unsurprising that, you know, this has, and we'll try to understand some of it, of what this means going forward. Now, the Europe and Far East, they had a good return as well, but those were muted when they came back into Canadian dollars just because of the appreciation of the currency. And then the emerging markets were outrightly, they had a bad year, primarily because of China, and that has contributed to the negative returns for 2021. Oil has had a great run, especially compared to where it ended 2020, and that's reflected in the returns that we are seeing in energy sectors, in indexes which have greater exposure to energy sectors like the TSX. Gold's lost a bit, but kind of held on to its gains, just giving up about 6% from where it ended up 2020. So let's look into these a little bit more in the coming slides. I'll start with the bonds. I mean, this is an odd year for bonds. It's very rare for bonds to have a negative returns. This is for a US aggregate index. You can see that 2021 was an odd year of negative returns. Now, if the economies continue to recover and interest rates continue to rise, This 2022 might be another year of negative returns. It has never happened before, but things can change at any time, and that could be one of the possibilities for 2022. Now, if we come to the equities, now if we look at S&P 500, it has had a great run in 2021 and in 2020. And every time, like what this chart shows is the blue bars here represent the net buys by retail investors. And so S&P for 2021, every time there has been a dip, there has been a rush to buy, and the Omicron dip saw a large inflow of dollars into S&P, which even though there was a dip, it continued to climb and ended 2021 on a fairly good note. So the retail investor has been holding up S&P 500, and how long this continues and how they react in case there is a major economic downturn, that's something that needs to be seen and observed going forward. Now, outside North America, if you, sorry, before I come to that, let me just go back to what this has done is that because retail investors have been buying on every dip or every opportunity they've had, the valuations on S&P 500, this is the CAPE, the cyclically adjusted ratio. Now it's trading at numbers which were last seen before the dot-com crash, or is slightly higher than what was seen in the 1929 depression. So this is nowhere to suggest that there is an imminent crash that is pending, but valuations seem stretched compared to where they were from a historical perspective. Now, so this is up for I just want to focus I want to wind up my North American story here and move to outside North America, where if you look at the year that was 2021, the index has really been flat. So there hasn't been much movement here. So most of the gains that have come on are in the North American indexes. And then the worst of the lot is China, where there were a lot of there was a lot of news coming out of there in terms of the government clampdown on tech, the Evergrande debt crisis, and so that has weighed down on the equities. So if you look at 2021, China has outrightly just lost about easy 30% or about 30% in this year. So it has been bad for equities for China. So I just want to wrap up here and say that going forward, it looks like, just based on where the valuations are at this point, their investors might be looking at ideas outside North America, given where the valuations stand, and looking for exposure in markets like emerging markets, especially China, where it might be investors will be looking at reevaluating the prices and see if there makes a good entry point. So if this is a great time of the year where you look at your portfolio, see where is its position, where the exposures are, and what kind of exposure you're looking going forward. So if that's something that you're doing as a part of your annual process and you want to have it relooked at or have a different opinion, please feel free to give me a call, 905-363-5035. Always happy to help brainstorm and see what can be done differently to have better risk-adjusted returns going forward. With that, I'd like to conclude. Thank you so much for watching my videos through 2021, and I look forward to your continued support going forward into 2022 and beyond. Bye for now, and all the best for 2022. Thank you so much.